How's it going, guys? My name is Brian Stringer, creator of the Weight Analyzer, and I want to do a full training on everything you need to know about trading. Now, there are so many great education platforms out there like Tradera. I have some basic education, and I have some reading material that you can actually look over also. It's going to show you exactly how to use the Weight Analyzer and just how to utilize trading overall. So we're going to have a full training. I'm not sure how long this training is going to last. It might last 30 minutes to an hour, but it's going to give you from point A to point Z, pips, how to measure how much money you're making, support, resist, trend lines, when to enter a trade, how to set up your exits, how to set up your take profits, sales, how to not be in the markets all day, how to just notify your phone so you're only trading 5 minutes throughout your time and you're done. Like everything. So if that all sounds good to you, if you want to profit big, and if it doesn't sound good yet, let's just kind of talk about some numbers first, guys. So let's just get into some numbers real quick. I'm gonna bring up one of my this is also a download you're gonna be able to get. And let's just say, for example, you start off with $1,000 in your Forex account, right? And you have $1,000 balance. And let's say that you're doing proper risk management. So we're gonna say about 0.10, 0.30, 0.40, 0.50. And you're aiming for a certain amount of money. So let's say your daily goal is $75 for that whole week. So at the end of the week, your account size will go from 1,000 to 1,300. Now, as you can see, it's compounding all the way down. So now if we put in 1,170, now it tells us exactly, what could potentially happen based off the lot size we choose. And I'm going to go through training on how to do that. But imagine that you just follow that rule. You can make over $2 million in 34 weeks following proper risk management. Once you get your goal, you're out. So once you reach your daily goal, no matter how you do it, based off the lot size you pick, which I'm going to help you learn, you're good to go. So if these numbers look good to you, if you have time to want to change your life, you're going to want to go through this entire video. If someone shared this video with you, go through the entire video. Now, there are other advanced educations you can do to go upon this video, but this is going to be a great way that you can actually get in the markets today and start trading. So let's go back to the charts. Let's kind of just talk about different things, guys. So the best time to trade the strategy that we're going to be going over today is between 2 a.m. to 11 a.m. Eastern. That's basically London and New York session. So, if you're on a different time zone, just kind of look it up, or just look up London and New York session, and those are the time you should be trading. Now, for those who don't understand what lot sizes and pips and everything, we're just gonna go over it briefly. So, for example purposes, let's say I took this buy here like it was recommended, right? And we had $1,000 in our account, and you did 0.10, I did 0.20. So this is you. We'll say that's me. I'll let you make more money than you. This is me. This is you. And we took this buy, and it went up, for example purposes, 60 pips. So if you did I did a 0.10, my account size went from $1,000 to $1,060. So you did a 0.20, your account size from $1,000 to $1,120. Now, for those who didn't catch on, basically, when you're taking your trades, you can determine how much you're making per pip. And basically, a pip is just a measurement in the market. So it went 60 pips up. When I took the trade right here, I put 0.20. So you're wondering like, okay, I don't understand how you get the $2 though. So let's kind of go over that real quick. 0.01 equals 10 cents a pip. 0.10 equals $1 per pip. 1.00 equals $10 per pip. So since I did 0.20, you did 0.20, you made $2 per pip. So guys, it's very basic on how to understand how actually money works. Like I said, we got so many way more in depth education. I'm not gonna get into depth on such small stuff right now. What I really want to just focus on is helping you understand, how to trade. You know, you can get into all the terminology and all the other stuff like understanding not when to trade doing news. We're not going to get into that today, but I'll have other trainings outside of that for those who want to actually kind of just get into that. So let's kind of just talk about, now you understand the power of what pips are and you understand, you know, how the money works. Now your issue is, okay, when do I buy, when do I sell, how do I figure it out? So it's levels to it, guys. So the first thing we're going to talk about is support, resist, and time frame analysis. So let's go ahead and delete all this stuff real quick. And as you can see, these are called candlesticks. So for example, right now we're on the 15 minute. That means this candlestick took 15 minutes to create. Now you're wondering, okay, why does this have a bigger body and this has a smaller body and a long wick? This is what's called a wick, that little small line, right? So when, let's say the market, we're gonna use this, let's say the market was going up and down this entire time on this candle, right? And on 15 minutes, it closed right here. When it closed here, it went up this far before it closed right here. So this little wick here indicates that the market tried to move this far, but it stops right here. Now, I'm kind of pushing a little forward too fast, but that basically, think about it like this. Imagine tug of war. It's going back and forth, back and forth. And then all of a sudden, 15 minutes is up and the momentum hits, right? And they tried to buy, but they struggled. They were struggling. They were weaker right now. And what happened? They started winning. The people caught the momentum on this side and started winning. So that 15-minute candle gave up and they started winning, going down. So as you can see, now this full body here, it went back and forth, up and down, but it closed right here. Or if you notice right here on this candlestick, let's look for one that no wick at all, or barely. So this is one with barely any wick at all, right? So as you can see, it went here, it started here, came up, came down for 15 minutes, closed right here, opened here, went up, went down, closed right here, closed here. So every candlestick equals 15 minutes. Now that being said, sometimes you want to look at longer than just a 15-minute candle or 5-minute candle or hour candle. So let's look at this. Let's see, 15, 15, 15, 15, right? If we highlight this real quick, and I'll have training on how to use TradingView, so I'm not going to go into details on how to use TradingView. We'll have a separate training for that. So let me make that a little bit more transparent so we can actually see through it. There we go. We'll go right there. That's cool. So as you can see, 15, 30, 45, 60, right? That's about right here. 15, 30, 45, 60. If we look at the hour chart, that's just that one candlestick. So you can look at higher time frames within that. So let's just see if we want to see a 4 hours, right? This is 4 hours worth of information. Or we can just click the 4 hour chart and it can show in one candle. Now, why is that important? Well, you want to look at the overall picture, but you don't want to, on the 15 minute, you don't want to be looking at a million candles, right? You only want to look at what matters at the beginning. So I use a top-down analysis. So when I'm looking at charts, I look at the higher time frames, like the 4 hour or a daily, to figure out what's just going overall in the market. Then we start zooming in to the 1 hour, to the 15 minute, to the 30 minute, and so on, to really see the data that's going on in those huge candlesticks. They don't look huge, they look the same, but that's a lot of information in 4 hours right here. It took 4 hours to create this candle. Now that you understand how the actual candlesticks work, you understand how pips work. Like I said, I'm not gonna spend too much time, guys. I just want to kind of get through this because I don't want to spend too much time on the beginning and the basics. It's probably gonna be about a good hour training, but it's gonna be totally worth it. Now, let's talk about support and resistance and trends. So let's kind of talk about what that is. If you throw a tennis ball to the top of a ceiling, what happens? It goes down. When you throw a tennis ball to the bottom of the ceiling, the floor, my bad, it bounces up. So let's say that, so this is how support and resist works, guys. Whenever you have multiple points meet, 2 or more points meet, that creates a resist. Now, obviously, if you scroll back, look how strong that is, right? So look at this is a pretty strong resist, because every time you get to this point, it bounced down. Every time you got to this point, it bounced down. And so, support is every time it came down here, it came back up. Every time it came back here, it came back up, like a ball bouncing on the ball. Or if you throw it at the ceiling, it bounces the ceiling. Now, if you keep bouncing that ball on the same floor over and over and over, sometimes it might eventually break. So as you can see, that's what we call a break, as when a resist turns into support and a support turns into resist. So I'm gonna draw a line. Let me bring my paint tool up, get my Picasso on. So as you can see, it came down and it started bouncing, and it finally broke, and then it came up and tested, and then it shot down. That's called a break and retest. It did the same thing. It did the same thing over here. It came back. Now remember, this was our support. Now it's our resist, right? So this is our resist. It broke it, retested, shot up. Then it did it again. Retested, shot down. Look at this, guys. This is a good support now, right? And this is a good resist. And it shot up. And it's going back and forth. And it broke it, and it went down. Now look, I want to do a point here, right? So look, you're probably thinking, well, Brandon, this candlestick didn't retest though, right? I mean, it kind of just shot right down. That's why this is the 4 hour, right? So that's why you gotta look at a lower time frame, right? So let's look at the lower time frame. Let's kind of zoom into this thing. This is the candlestick we're looking at, right? So this is taking 4 hours to finish. So we got plenty of time to go look into this candle. Let's say it's already starting to create. And so we'll go to 1 hour. Let's go find it. And then we're going to 15 minute. See how much data happens. So as you can see, now you can kind of get a better idea on what was going on. So it broke it, retested. So it still did that retest. You can see all the information because you are in a 4 hour time frame. So boom, boom, boom. So now you kind of get the idea, guys, on where the general market is going to go. But this is not enough to figure out how to trade. This is a good foundation. So there's this thing called confirmations or confluence, and we're going to go over that also. And basically what that means is you want multiple different confirmations to figure out, is this a good trade or not? So one of your confirmations, and so you need multiple confirmations to create confluence, like congestion, right? So confluence, right? So one of our first things you just learned right now is support and resist. So when you see good support, it means that, resist, it means it's probably gonna go down until it breaks and retests. Then it's gonna keep going down. Or if it hits support, it's gonna probably keep going back up until it breaks. But if it doesn't break and it keeps retesting and going up, it's gonna probably go right back to that resist point. So is that enough to know anything? No, Brandon. So that being said, let's talk about trends now. I'm gonna tell you how to make all this go together. So basically, what's all trading is, guys? Doing basic stuff and making it all work together. And we're gonna figure it out. So now, if you don't understand support and resist yet, maybe you should pause this video, go watch some YouTube videos, or you can go through my training and go dive into support and resist before we move on to the next part of the video. But I think I explained it pretty well for you guys. Let me see, remove drawings. All right, cool. So let's go to 4 hour real quick. Let's remove all drawings. Now, we learned that. Now let's talk about trends. So remember, a support and resist is 2 lines meeting at one time. So I want you to go and practice that also. But I also want you to practice creating trend lines. So let's just draw this trend line. So you're gonna go to this tool. So we use horizontal line to create support and resist lines. We use trend lines to create trends. A trend is just the same thing except it's diagonal. So it's creating 2 more points going up. So this is probably a better one right here, right? Because you got more and more points. The more points, the better and stronger the trend is right there. So as you can see, let's do it again. It was breaking. I mean, it's bouncing on top, so it's going up. So if we know that this is our trend, that by the time it gets back here again, what's it gonna do? It's gonna go back up. Till it's gonna go back up. Till it breaks it. Let me get rid of this real quick for you guys too. It's probably like distracting. We test it. Let's go to all the, that's on a daily, my bad, but it's still the same thing. So let's go to 4 hour. What happened on the 4 hour? It came in, we tested those lines. Now, this is our confirmation that it broke the trend and we created a new trend. So it breaks it. So then it did this. So now what we're looking for? We're looking for it to go up. And then what happens when it hit this? It's gonna go down. And what happens when it hit this again? It's gonna go down. And what happens when it hits this again? It's gonna go down. And then when it happens to hit this, unless it breaks, if it retests, it's going down. But if it didn't retest, it came up, hit this, now it's going up. It's going up. It's going up. And it's creating higher highs and lower lows. So as you can see, it's just doing it over and over and over, guys. So it's very simple. Break, retest. So break and retest on support and resist, and break and retest on trends are very important to your foundation of trading. So now that you understand support, resist, and trend lines, let's look at how they all can work together. Let's remove lines, remove drawings. So I'm going to draw up just some support, resist, and trends, right? And so let's look at one. Let's draw the trend lines first. I mean the support and resist lines first. So boom. And this is how I like to draw my support and resist to keep it simple, right? Let me show you a little trick to make it easier. You can go click here, take it from bars to lines, and just look for the lines. So I look for really strong areas of support and resist. So look, boom, it's nice and clear. You don't have to see all those bars and all that good stuff. Nice and clear. Look, multiple points meet. Boom, boom. It's going back and forth from that. I did it again here. So easy to see, guys. Did it again here. And I always do it like a 4 hour or a daily, and I'll explain why soon enough. Boom. Boom. Okay, cool. So this is all our support and resistance lines, right? Now I want you, let's take it back here. Let's just draw. Actually, you know, we can use this to draw our trend too. So let's say we draw our trend up right here. That's our trend. If we look at this, guys, it broke our trend, broke our support, retested under the trend line, at the same time it hit the resistance. I mean the old support now became resist. It broke our trend, so it broke our trend going up. It broke our support, now resist, and when something's resisting, it's going down. And when something's supporting, it's going up. So it's under our resist, it's a resist now. It broke our buy trend, which was going up. So now that's called, remember I said confluence. So now, first thing was it broke our trend. Second thing happened was it broke and retested our support and made it resist. So what does that tell you the market's gonna go? Good chance, down. And look what happened. It came right down here. Boom, boom, boom. Let's see if we can find another one real quick. Let's see. It's going up here. That's not let me show you real quick. Boom. Now look, this is the 4 hour, right? Let's just look at this area real quick. If you want to look at a 15-minute, now we got more data we can look at. It's retesting. It broke our 4 hour trend and our 4 hour support. I mean our resist. So now it's the support. So now there's a good chance this thing's gonna continue. to be a buy. So what's gonna happen? It's gonna go. We're gonna wait for it to go up, hit this again, boom. And what's a good chance it's gonna go? To right here. Now, that's not enough. We need multiple confirmations. So if you get good at just grading yourself, okay, look, I know what my trend is. And another thing you want to know, guys, is you want to trade with the trend. So as long as the market is going up, trending up, you're only looking for buys. When the market's trending down, you're only looking for sells. So you look, but you only draw your trends on your higher time frames, and you only draw these support and resist on these higher time frames, and then you look for your entries on your lower time frames, so you know exactly where the market's possibly gonna go. Now, we got support, we got resist. Now, we talked about multiple time frame analysis. We talked about high value areas, how to find those. Like, imagine you did all these marking up support and resist on the 15 minute, and you was trading on the 15 minute. You wouldn't be able to, you'll only see this much. So you'll never know what's going on overall in the market because you're looking at a small scale. You gotta look at the overall scale to know what's really going on, or you're gonna you can really mess yourself up. Because, for example, let me see if I can find a good example. Let me see, what's that part looking like right here? Let me see what that's looking like. Okay, cool. Let's look at that real quick. Let me see if that can give me a good example on what's going on. So let's say we're looking at this, right? Let's see if this is a good example. We wouldn't even seen this part, right? So let's just delete this real quick. So we're just looking at the market like this. And we're just like, look, we're looking at the market like this, and we don't know what's going on. We're just looking at the 15 minutes. This is the 15 minute. And we're marking our charts up, and we're like, okay, cool. Okay, support, resist, support, resist. Oh yeah, look at that trend. That thing is going up. That thing is strong. I'm about to do a buy. That thing about to go to the moon. All right. So I'm about to say it's about to go. It's gonna. Oh, and you don't even know this thing exists either. So we're gonna delete this real quick. Oops. You don't realize that this is a 4-hour support resist line, right? So we know from looking at the 4 hours that this is support 4-hour resist, but let's say we didn't, but we'll say it did because it still got some testing over here. So we'll look at this. So let's say we thought it was gonna keep going up because we see it trending up. And then since we don't have all of these 4-hour support and resist lines, we look at the trend and we think it's trending up, and then guess what? It reverses on us because we didn't see the overall picture. On the overall picture, the 4 hours is strong confirmation. So you don't want to trade on a 15 minute against, see, it's a trend on the 15, but look how small it looks on the 4 hour. That's nothing. It's just going back and forth. So now that you understand break and retest, support and resist, the next part, guys, that we're going to talk about, we're pretty much getting through this. This is pretty dope, guys. Let's talk about take profit and stop loss. And yeah, we'll talk about that next. So let's say that you're good at your entries now, right? And we're not done with the entries. But let's say that you are getting pretty good at entries, right? Let's just look at it right quick. I just want to give you an education on what a stop loss and a take profit is real quick. So let's say that, we're looking at 15 minutes. We'll act like we're looking at this. This is what take profit and stop loss is. Let's just look at like we're looking at this area right here. So what's cool about Forex, guys, for those who don't know, hopefully you're learning some stuff, you're like, man, this looks a little too easy, right? Look, I'll make it so much easier soon, guys. Keep watching this video. Whoever shared this should share it with them, man. Share it with them. Let's say that, we looked at the market about right here. Let's delete this thing. It's kind of confusing me now. Let's say that the market's right here. And we understand it just hit this resist area, right? So you can bring up this tool called, it's in here somewhere. It's called long position and short position. Long position means you're looking for buys. Short position, you're looking for sales. So if we're looking for long positions, you're gonna click here. let's say we entered the trade right here, and we know, for example, since we got we know that there's a potential it can go all the way up here. Now, I'm not saying we have to do all that, but let's just say we did, right? This was 116 pips, right? And then you want to figure the stop loss out. And let's say the stop loss was, for example, we'll go for 15 pips. What's cool about this, guys? This is about Forex. It's only risky if you don't know what you're doing. We're aiming for 116 pips. It's right here, but we're only risking 15. So let's say we did $1 a pip. If we went down this way, we would lost $15. But if we held and went to our direction, we made $116. How often would you like to risk $15 to make 116 bucks? Let's say you only wanted to go for 20 pips. You see how easy that can be. Boom, 20 pips, you're done. So what's cool about this, guys, is let's say you only want to aim for this 20 pips, and you want to risk 15 pips, and you don't want to watch the market all day, right? So what you can do is on your phone, on MetaTrader, and like I said, I'll have more detailed trainings on how to do all this stuff, like enter the numbers in. But on your MetaTrader 4 app, when you log in, which we'll have separate training on, it ain't hard, you can take the trade for buy or sell. And you can type in 75.157 as your take profit and 74.794 as your stop loss, and go about your day, and either it's gonna hit your stop loss or your take profit. And let's say you set your take profit ever, because you definitely don't want to wait that long, right? Then your take profit would have been 176.137, your take profit, and when it hit your take profit, it will automatically take you out. As you can see, it never hit your stop loss. Now, you're probably wondering, okay, Brian, that sounds good and all, but how do I determine my stop loss and my take profit? Well, take profit, I always tell people, maybe in the rule of thumb, sometimes you want to just either go zone to zone, or if you don't have a lot of patience, go for like 20 pips, or just look at the market and say, okay, look, do I have enough room to go for at least 10 pips? Then go for 50 pips or whatever, go 50 pips and dip, 20 pips and dip. Now, as far as figuring out your stop loss, there's this tool called the ATR. So let's just go over that real quick. Now, with the ATR, guys, it stands for average daily range. So let me give you a good example on two different ones. Okay, so let me see. Let me give you a good example. I'm gonna give you a really good example. Okay, let's just use this for an example. The ATR basically is not. It represents the last 14 candles on, the average amount of pips it grew. So the average amount of pips it went. For example, let's look at here in this area. The average amount of pips it was going was around 100 pips, as you can see right here. If you look at we look at this right here, 50 pips, right? So the average amount, let's say we took this trade right here, and let's say it said 55. You see on the, by the left, it says ATR 14 RMA 0.055. Let's say that it says, and that's right there for those who don't know what I'm talking about. So let's say you see what it says 0.056, right? What you can do, just to keep it simple, is you can first of all, you can find, let's say we're looking at support, we got support and resistance drawn up. And let's say that we take this trade and this is our support, and this is where the pressure is, right? So let's say we put our stop loss right here. So if we're wrong, you want to take us right here, right? Because this is where the last support was. Let's say we took the trade right here, like right here somewhere, and we recognize like there was some good support and resist in these last two areas. So that's about, if we use you can use this ruler and you can measure it, that's about 15 pips. Now, That's not a good way to trade because look at this. It came up, it came down. It almost took you out. So that's very risky, right? So where the ATR comes in play is we know the average ATR. So right here, let's say we look at the average ATR. We took the trade right here. So the average ATR when we took that trade was about 85 pips. So you want to do, this is how you can do it. Well, not 85 pips. It's not 85 pips, my bad. But I'm going to explain it to you. So let's bring up our long short tool. And we're going to put it where we put our entry. Let's say our entry is right here. And originally, we put our stop loss. Oops. We put our stop loss right here. Why? Because that's where the support, the resist was, right? And our stop loss was 0.318 right here. That's the only thing we're looking at, right? 0.318. So put this in your calculator for me. 0.318. Now, that's 31 pips total. Now, let's bring up the ATR. Where our trade is, right here. We took the trade. Right now, you see where it says 0.081? Right here, just in case you didn't see it, it's right there, 0.081. That's where we took our trade. It's a 0.081. I want you to do zero. You got the you see where it says 0.318 on the tool at the top, the calculating tool, and at the bottom ATR says 0.081. I want you to do 0.318 plus 0.081. So that's 0.399 you should have, right? So we're gonna move this thing till it says 0.399. And that's our new stop loss. And that's how you can determine, because now it gives you the breathing room because it gave you the average amount of stop loss. So now, I feel like you guys are learning a lot right now too, so I want you to pat yourself on the back. So now we figured out our stop loss. We figured out how to get to our take profit. You can go for like 20 pips. You can go from zone to zone. So we can go for 60 pips because we know this is a zone right here. Or we can just go for 20 pips. Where's 20 pips at? And 20 pips has a good little area too, because that's a good little resist area inside the 15-minute, right? But if you want to be a short-term trade, you can go for 20 pips right here. Or if you want to go for a little longer, you can go to like 60 pips. Or if you want to really hold out, you go for 150 pips. So, or that's gonna be you can have 3 different trades: take profit 1, 2, and 3. So now you figure out your stop loss and your take profit. Now you understand support, resist. You understand retesting. Now let's figure out how you determine what lot size you're going to pick. So I want you to download this app. And like I said, I have a separate video going into details, but I just want you to download it. I'm going to type it in here. It's called Stenu. Stenu, right? So I'm going to type it in for you. Stenu. Download the app. Pause this video, download it. Let me know when you have it. I can't hear you, but just let me know in a way. So I'm gonna assume you pause it and you just let me know that you have it, right? So I'm just open up the app. Stenu. Now, let's look at this, all right? We're average. Let's say that you have $1,000 in your account. Let's put that in the account balance on Stenu. I'm gonna write it out so you can see it. So on Stenu, it has a point that says count balance. So I put $1,000. It says risk. So now you guys say, how much do you want to risk per trade? And I always tell people, you be consistent with everything. So you want to risk 5% every trade? Fine. If you want to risk 2% every trade, fine. So let's just assume that you want to be a little high roller and do 5%. So you do 5% every trade that you're willing to risk. So I always tell people 2% is very conservative, 5% is kind of aggressive. Anything more than that, you're just doing too much. So risk 5%, so let's put 5% in there. And it's asking for our stop, loss, and pips. And let's say that's what we look at this. And it says we're risking 40 pips. Okay, select currency. We're doing AUD, Japanese yen, hit calculate. So we can risk, so we did 40 pips. So it said the most we're risking is $50 on our $1,000 account, which is not bad. So we can do a 0.13, right? So that's $1. That's $13 because 0.10 is $10. My bad. That's $1.30 because 0.10 is $1. So 0.13 is $1.30. So we put our calculator. That's how much money. How much money do we make though off that trade, right? Let's say that we went for that big one, right? Put in $1.30 times 65. You made $84. So then boom, you made the $84. So my tip for people is you don't trade the same lot size every time. You trade based off what you're willing to lose. Meaning that you're willing to only lose 5% every time. So if you have $1,000 account times 0.05, that means that on $1,000 divided by 50, you have to lose 20 trades in a row to blow your whole account. Like every single trade you have to lose. That's why it's good to know. So like, let's say you risk 20%, right? That means you're only risking $20 every trade. That means that you would have to lose 50 trades to blow your whole account. Let's say you risk 1%. That means you have to lose 100 trades in a row to blow your account. So when people blow their account, it's because they don't understand the basic rules of what lot size should they pick based off their lot size, their stop loss, not their take profit. And then once you figure it out, you gotta figure out how you figure out your stop loss. So you find out the last support and resist, some really good stuff, and then you just plus it, you put this up here. And so for example, when it was right here, it was 290, let's say it was 290.0295 plus 0.095, and then we would have put that together and just found it, and that would have been our stop loss. You put that stop loss, that's your stop loss right here, you put that in there, and you know your stop loss. You know your take profit, you're good to go, you're done trading. So now we figured out all the good stuff when it comes to support, resist, trend lines, retesting, figuring out your stop loss, figuring out your take profit, figuring out your lot size, all the important stuff. Now you gotta figure out your entries. Okay, so look, Brandon, I can't get it, but like, how do I get the best entries, right? So that's where the wave analyzer kicks in. So let's go back and first of all, let's put all our stuff back together real quick. Let's put all our resistance stuff. Let's see, make sure I know I deleted some. Let's go back to 4 hour. Let me see, that's a good one. That's I don't need that one. So that's good right here. That's only make sure. So what you want to do first, guys, is the first step is you want to make sure that you have all your support and resist lines set up, so you know you're not gonna have no unforeseen things going on. Boom, 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 boom. That's good. I like it. So we got everything. Let's draw a trend line for the heck of it for them. Right now this trend line is going down. It's going down, down, down. Let's change that color. I want something a little bit more. Yeah, that's cool right there. Now we know exactly where the trend is going on our 4 hour. Now we have everything marked up. So let's bring up this tool called the wave analyzer. And what does the wave analyzer do? It tells you when you should buy, when you should sell, when you should exit, and it's another way of confirming the direction of a trade on a trend. So even if you have your own style, you can use it for confirming. Because remember, the more confirmations, the better. So how does this tool work? I use it as a signal and not a confirmation. Let's say that I got a sell, all right? If I get a sell, I will not even look at the trade unless it meets my rules first on the signal. So let me write this down. Rule before looking at rules. Okay, let's say first step. First step is entry confirmation. Second step is rule confirmation. So we're gonna explain what that means next. Man, y'all becoming some good traders already. So the second step is rule confirmations, right? So the first step is entry confirmation. So let's just look at that first. What does that mean? That means that before I even look at the second step, I gotta go through the first step. So in this tool, let me remove drawings. Not remove drawings on. Let me see if I can hide it. Okay, cool, perfect. These three lines, when it calls a sell, these three lines need to be above the second bar after that sell. So if it calls a sell, these three lines need to be above. So as you see, it's above, right? And for a buy, it's vice versa. So for a buy, these three lines need to be below. As you can see, it's only two lines. So it's not a good trade for me personally. Let's find one that's good real quick. Okay, there we go, the buy. So is there three lines above, below it? Then I'll take a buy on the second candle. Now, let's say, for example, it does call a sell early, but it's just the purple line. This purple line is considered the trend, right? So let's say that it called the sell, but it didn't follow my rules. So what I would wait for is this. I just trade a light. Support and resist. Oh, let me bring up my little drawing tool. Oh, there it goes. Right. So it caught the sell. I'm waiting for it to come. It retested on the purple line multiple times. Now that confirms my sell. Now what else confirms my sell, guys? It's on a support. I mean resist there. It broke a resist. It broke my trend on my purple. So this now all of the buy candlesticks are under my three lines and my 4-hour confirmation line. Let's go to 15 minutes real quick. How far does that go back? Let's see, it could have sworn. Let me see where I put it at. All right, let me highlight this so I can see it better. 15 minutes. There we go. So look on the 15 minute. It called the sell. It's below. It's under my. It's over. So did it, first of all, before I even take the sell for the 15 minute, did it follow my rules for the second part? Yes. Is it respecting my support and resist? Yes, it's under my resist level. It's on a good resist line. It called a good sell on the 4-hour also, and it's riding a nice trend going down on the 15 minute even. So would you have taken that trade? Yes. Now there's a sell. Let's remove all this remove some of these drawings real quick. Sell, what we have taken it down to? This next zone. 50 pips. That's it, guys. So before I even look for my support, my resist, my retest, my trend, I wanted to make sure the three lines were above this bar. Then I look for support, resist, and retesting on value areas of a higher time frame. So what's cool about this tool, guys, is it can alert your phone, and then when it alerts your phone, you just look to see that did it follow the signal rule first. Yes. Okay. Now does it follow my confirmation rules? Does it have support and resist? Does it have is it on my trend going? Am I on? Is it a buy trend? Yes. Then you take the trade, then you just take it to the next level, and you figure your stop loss by using the ATR plus the last support and resist. And then you determine your lot size based off of the Stingu app to figure out what lot size you should choose based off your stop loss. So let's do some examples real quick. So let's play this back real time. We're gonna look for something that follows our rules. Okay, cool. Wait. Well, let's bring it back a little bit. All right, so we gotta buy. We gotta wait for the next candle. So it's gonna alert us on the next candle, right? All right, cool. So is this above our three lines? Yes. But is that enough? Is it a good support line? Oh yeah, look at that. It's on the 4-hour support, right? Let's look at the trend though. Is the trend up? Oh, it's right on the trend, right? So look, there's two ways we can take this, right? We can take it all the way up here. So let's figure out our stop loss and our take profit. We're gonna take the trade, right? And follow some rules. So let's figure out the stop loss first. So let's just bring up this tool. We're looking for a long. Remember, short is for the sell. So we're doing a long. We're taking the trade right there. Our last resist was about right. This is a really tight resist actually. So this is like a good resist area. So look right here was our resist. Our resist area. So let's look at the ATR. And plus so the stop right here says 0.144. So let's do that. 0.144 plus when we took this trade, it was 0.053. So 0.197 is my stop loss. This is a pretty good stop loss actually. 197. And actually, I would have made this my stop loss right here actually. So, because look at this line, these lines right here. These are actually, that's a good support and resist right here too. So let's do a little bit safer. 184 plus 0.059. So let me see, 184. Let me see, 0.184 plus 0.059. That's 243. This is our stop loss right there. That's our stop loss. And this can either be a take profit here. If you want to go for a small take profit from the 15-minute perspective, see that support line, the support area right here? And that'd be 30 pips, and we're risking 24 pips. So that's a good ratio. That's a 1-to-1 ratio almost. Or look at this 4 hour. If you want to really try to hold it, you can. So we'll try both. We'll see if we get to both. So let's see if we can get to this 4 hour for 100 pips. Yes. And we're on, regardless of which TP we're going to, we're only going for the same. We're always going to pick the same lot size. So look, we're risking 24 pips. Let's say we have $1,000 on our account. We're doing 5% every trade, right? We're risking 24 pips. 5%. AUD JPY, can calculate. We can do we can do a nice little lot size. So we can do text 0. So we can do 0.1217. So that's $2.10. That, and if we lose 50 pips, we lose $20, right? I mean, not $20, like $50. But if we win, let's bring our calculator up. Let's do $2. Let's just do $2. Keep it simple. $2 times, if we go for 30 pips, then we make $60. If we go for the 100 pips, two times 100, you make $200. If you go for even higher, 2 times 170, you make $340. So as you can see, guys, it's not that hard, guys. That's all trading is. We literally broke down everything. And with my tool, it alerts your phone when you should take a buy sell. So actually, we didn't even look at the trade to see if we won. So let's go ahead and look at it, see what happens. Does it hit our stop loss? This is our stop loss. See how it's riding that trend? Boom, hit take profit 1. Let's see if it hits take profit 2. Let's speed the thing on. Oh, ooh, ooh. And you could have took another trade right here. So you could have multiple trades. So yes, it's definitely knocked out. Then you could have took, if it did another trade, so you could have multiple trades. You could have been holding out on this trade. So you could have 1 trade, 2 trades, 3 trades. Then look, it kind of like, it still didn't break our rules, but I would have got it right here because it started doing sales. It's riding too much along this area. It's kind of scaring me. It could just easily just drop down this way. So I would tick it out, and we would have made about, let's see, 250 pips. Now remember, before we do any of these trades, remove all drawings. First step, does it for the buy, the 3 line has to be below. For the sell, the 3 line has to be below. Now, if you want to set up alerts, you do need to be on at least a $14 a month or more plan. You can only get access to Wave Analyzer if you're an active member with our team and Tradera, or if you're a member of FX Social. There's the only 2 ways you can get the Wave Analyzer. And how you can do it is when you want to get alert to your phone, you hit alert. You pick a distance, pick Wave Analyzer. And so I wanted to hit me know when there's a buy coming for the 15-minute chart. And I want to do once per bar closed. And I wanted to notify my app, so you can download an app called TradingView and log in when you create your account. And I want to say AUDJPY 15-minute buy. And I just copy and paste that and hit create, and you can see it right from your phone. Just continue. So then, well, actually, hold on, let me go to alerts. Let's go back in here real quick. Let me make sure I tell you. Oh yeah, so once per bar close. Then that's what I wanted to let me know when I'm doing. You can either have it where if you know the overall trend and you only want buy alerts, you can do that. Let's say you want both. Then you go to add alert again. Wave Analyzer. Sell entry. Once per bar close. Notify app. You just hit sell instead. So now you can check your computer or phone when it alerts your phone, and then look for your rules. You already have your whole thing marked up already. You already have your trend line marked up. If it follows the first rules, this first set of rules, and then it's following your trend, and then you know exactly how to figure out your stop loss now, then you're good to go. Now, what else it also has is if you right click, add alert. If you want, you can have it where it tells you when you should exit the trade. So I want to tell me when to exit just in case I'm not paying, just in case I don't put it, just in case my stop losses might be wrong. Exit. Buy. Or whatever, you just call it what you want, put it in both slots, still the same thing. So you understand everything, guys, from what is pips, what is lot sizes, how to figure out your lot size, support, resist, trend lines, retesting. You understand the wave analyzer. You understand the power of confluence. You understand how to figure out your stop loss using ATR. You figured out how to figure out your lot size using ATR. You understand only risking 5% in your account. So now you know on a 5, you can use any account balance now, and understand you cannot blow your account unless you lose this many times, and you only follow your rules. And if you do that, guys, you consistently grow your account. As you've seen the calculator you had, guys. It can get nasty, but you have to follow your rules. You have to be. The good thing about the reason I like knowing exactly how much to lose, because it takes away the fear of loss. So okay, cool. I know I'm only gonna lose 5% of this trade, so I'm not gonna be scared to take the trade because the most I'm gonna lose is 5%. See, when you don't know how much you're losing, yes, it's scary to take a trade because you don't know where the trade is gonna go. It could lose or win, right? We don't control the market, but we can control our strategy and when we take our trades and use the best probability of trading and understand, and we control how much we lose if we lose. So hopefully this helped, guys. You click the download button, you're gonna get this guide. Another thing that can help you, for one more confirmation that I want to talk about real quick, not gonna take a long time, is understanding prices candle entries. So there's lots of different candles you can learn. And when you hit the download button below this video, you're gonna get the candlestick Bible, so you can learn more about candlesticks. And this is learning how you can use these as another form of extra confirmation. The more confirmation you have, the better, right? And then we also have this book, Trading the Zones. You remember how I tell you I'm trading zone to zone? You can read this book. So guys, you can really become a professional trader by just reading these 2 guides, going and using the wave analyzer to figure out when to trade, and relaxing because you're not gonna have to look at the market till then. And then if you're going to go to a higher form of education, now you have this great foundation to take you there. If you enjoyed this video, let me know. Again, guys, my name is Brandon Stringer. You can follow me on Instagram at CEO Brandon if you enjoyed the video. I love the wave analyzer. I love confluence trading. Hopefully I made this, a lot of people tell me I'm a great teacher when it comes to just breaking down things at a very easy level. Remember, like, my favorite times to trade between 3 a.m. and 11 a.m. So you pretty much got the tools, you got the, you got everything. Even if you don't use the wave analyzer, at least you got something out of this video to where you can figure out maybe your own strategy. But if you do want to use the wave analyzer, it's gonna tell you when to buy and sell. All you do is follow your rules of confluence. You know how to put your stop loss and take profit. I also have another tool called the Trade Manager. That's gonna be in a separate video, but basically if you don't want to use stop loss, you can use the Trade Manager. And basically what it does is it works in the background, and when you take a trade, it'll recover your losing trades for you instead of it taking a stop loss. So it's kind of up to you if you want to use a stop loss or you want to use a Trade Manager. I always tell people at the beginning, trade demo off an account balance that you would typically use. Don't use the $10,000 of balance and you know you're only gonna put $100 in your account, because it's not gonna be the same experience. When you see that 5% of 10,000 and that 5% of 100, you're gonna lose your grind. So let's just get used to where our income level is in, because you're gonna get there eventually, guys. You gotta build your accounts up. Hopefully this helped, guys. I'm looking forward to your success. And that's it, guys. God bless.